lower. Lots and lots of earnings to go over. Plenty of stocks on our radar. So let's straight away get to it with our list of top 10 stocks to watch. Our team is standing by. Guys, good morning to all. Let's start with, of course, all the big earnings. So Darshan, how is Eicher Motors?
So Eicher Motors has reported largely in-line set of earnings for Q1 FY26 and company continues to maintain its commentary about preference of growth over margin. But that's a concern because for a revenue growth of 17%, you are reporting EBITDA growth of 3%, margin falling below 24%. It remains to be seen for how long and what's the level that Eicher will want its margin to settle at. But as of now, on the margin front, it's a concern. Talking about the headline numbers, profit has increased 10%, revenue was up 15%, EBITDA has seen a just jump of 3%, and margin has fallen to 23.8% from 26.5%, almost 300 basis points fall. That's year on year. Now, on the volume front, along with TVS Motor, Eicher continues to outperform its peers on YY basis. Royal Enfield volumes were up 17%. Even on the commercial vehicle side, it saw a growth of 11% year on year. Commentary, it's looking largely positive and saying that Royal Enfield continues to gain market share in the middleweight segment. But we'll have to see how does market react to its commentary related to focus on growth over margin. But as of now, I'm going with red.
All right, you're going with red. I'm hoping they launch a new bike soon, maybe an 800cc, which is not on the cards, but nothing wrong in hoping. Sudarshan, thanks for telling us about that. I'm going with green for Coal India because those numbers look good. Top line was a little bit better. EBITDA number was better at around 12,500 crores, even adjusted for the stripping ratio. Well, it'll be around 11,200 crores or thereabouts. So it goes down as a beat. How did that come about? Well, the street was bracing for a bit of a weak quarter because the last month or so as well, the volume offtake hasn't been great. And we already had the cheat sheet because we already had the volume numbers with us. So there was no operating leverage that will play out given that the volumes are down by close to around 4%. But yet they managed to outbeat the numbers. How was that? The realizations are more or less steady. That's on the blended basis. The FSC realizations moved up marginally by around 1.5%, which is good. And the e-auction realizations didn't decline as much as estimated, which is good as well. So the e-auction premium to FSA sales is at around 50%. The street was working with a number of around 45%. The employee cost as well was lower because the number of employees are down by close to around 3%. And in addition to the good operational performance, they've given a dividend of 5 rupees and the gross trade receivables on a sequential basis has come down a little bit. So green on Coal India. But hopping across to Ekta, she's here to tell us about Mankind Pharma. Ekta.
Well, morning. Mankind Pharma revenue looked good. It was up around 23.4% year on year, largely in line with estimates as well. Margins came in at around 23.7%. The street was anticipating around 25%, and there was a profit decline this quarter. Maybe the stock would be resilient on account of the internals, such as the domestic business, which was up around 19% year on year, the consumer healthcare business, which is a part of the domestic business, which was up 15%, and exports, which was up around 81% on a year on year basis. What could probably weigh a little bit on the stock is the operational as well as the profit estimates, the profit performance as compared to estimates.
All right, Ekta, thank you very much for that. So it's Mankind in focus. JSW Energy is the next one we want to talk about. Vivek is here with details. Vivek, morning.
Well, good morning. Well, a strong showing, especially when you're comparing it on a year-on-year basis. But remember, it's an optically very strong number, given the fact that there are two new acquisitions, two new platforms that have started contributing to the earnings from Q1 FY26. So when you're talking about the revenues have jumped up by 79% on a year-on-year basis. EBITDA almost doubling on a year-on-year basis. EBITDA margins at 54.3 versus 49.4%, and profitability higher by 42%. So what is it that aided the profitability compared to last year? So KSK Mahanadi, this particular asset that the company acquired, that got operational, 1.8 gigawatt got operational, and that contributed EBITDA of close to 867 crore. Along with that, Utkal Unit 2 has also started operation, and almost 370 million units of power was generated over here. The O2 power platform also started generating, and that contributed EBITDA of close to 219 crore. Now, the company has upward tweaked its guidance as far as 2030 capacity addition is concerned. They are now aiming to take capacity to 30 gigawatt. Remember, the company currently has a capacity of close to 12.7 gigawatt. What was a slight miss was the fact that merchant power volumes as well as prices were slightly lower. So the open or the non-long-term capacity was something that did see quite a bit of a dip this time around.
Okay, in fact, thanks very much for that, Vivek. We will be chatting with the management of JSW Energy. They'll be joining in around 9:40 to talk about that performance. Okay, let's move on. A couple of numbers coming in from the insurance space as well. Yash is joining in. Yash, how did it look for PB Fintech and Niva Bupa?
Well, to start with PB Fintech, the numbers for PB Fintech were pretty strong. The premium growth has, exceeded the industry. The premium generated about 40% growth as far as that is concerned. The operational performance also remains strong in the quarter. If I have to speak about the highlights, the core online insurance premium was up 35%. New protection, which is health plus term insurance, that also grew by about 46%. Operating revenue, that was up by about 33%. Core online insurance revenue growing by 37%. So strong operational performance. This was on expected lines coming from PB Fintech as that guided as far as the fourth quarter also is concerned. This time around, both the core online business and the new initiatives business both have performed very strong, contributing to the overall revenue growth. Niva Bupa, the numbers have been very bad this time around in the first quarter. The net earned premium, that has grown at about 20%, but the operational performance is very, very weak. Underwriting loss has increased 100%, almost 100%. That has doubled. Operating loss has come in at about 145 crore versus a profit of about 23 crore. Combined ratio has spiked very sharply to 117% as compared to 106%. So decent premium growth. This is slower than what the company has been doing in the past, but the operational performance deteriorating very, very sharply in the first quarter.
Okay, all right. Thanks a lot for that, Yash. Let's hop across to Vamakshi. She's here to tell us about Thermax. Vama?
Good morning, Nigel. Thermax, the revenue was a miss. It declined by almost 2% on a year-on-year basis, and this is coming after, several quarters of revenue growth. This is disappointing, definitely, but, the operational performance, on the other hand, was much better than what the street was working with. The EBITDA has managed to improve by almost 401 basis points on a year-on-year basis, and this is because there was an incentive from the government worth almost 56 crores. The net profit resultantly saw an uptick of almost 38% on a year-on-year basis. Now let's look at how each segment has performed and contributed to the margins this time around. Industrial products and chemicals, which are generally good contributors to the margins, this time they're seeing a degrowth. The industrial products margins are down 88 basis points, and the chemical business is seeing a much sharper cut of almost 850 basis points this time around. On the flip side, industrial infra margins have improved substantially to by 996 basis points, and this is mainly on account of the incentive that I mentioned earlier. And the green solutions business is picking up as well, up almost 183 basis points. Now, the ordering activity, it was quite, robust. It did, order inflow was up almost 7% on a year-on-year basis, and the order book as well was up almost 7%, and this has come in higher as compared to what the analysts were expecting. So overall, the revenue has missed estimates, but the operational performance was much better on account of the incentives, and resultantly going with the green for this counter.
All right, and we'll have the management with us, a little later to talk about these numbers and the outlook as well. Swiggy is the next one we want to focus on. Mangalam has got this. Mangalam, morning.
Good morning. So Swiggy, if you look at the reported numbers and you look at the internals, there'll be two different stories. The internals are stronger, and I'm going with green because on a reported basis, the net loss has widened all the way from 445 crores to 1,000 crores because of the quick commerce spends. But food delivery, that continues to do well and also sees, operating leverage benefits come by out there. And in quick commerce, the good part is that the company, just like Eternal, has said that they've moved past peak losses in quick commerce and their average order values are now fairly comparable to that of Blinkit. So all of that points towards green for Swiggy. Remember, the reported revenue grew by 54%. The EBITDA was a loss of 954 crores. And the net loss was largely led by ad and sales promotion expenditure, which was on account of the Max Saver and other schemes that they come out with on their quick commerce business. Food delivery growth at 18.6%. The EBIT grew over 200%, telling you about operating leverage out there. And quick commerce revenue growth of 115%. If you compare it with the way Zomato or Eternal reported their numbers, they've been gaining market share in food delivery. Zomato's food delivery business grew 16%, whereas Swiggy grew 18.8%. But Blinkit has grown a lot faster than Swiggy. And that is something that the analysts expect already, which is why Swiggy trades at a sharp discount to Zomato as well. They've maintained their contribution margin positivity band for quick commerce. The only thing I'm watching out for is that they have 12% stake in Rapido. And with Rapido now entering food delivery, they are looking to monetize that stake. So whenever that happens, that would be a further addition to their cash balance. Going with green on Swiggy.
Okay, all right, got it. Yeah, indeed, they put out that public statement as well that they'll have to reevaluate what they want to do with that 12% stake in Rapido, because Rapido itself is getting into a related business now, which is food delivery. Thank you for that, Mangalam. We'll watch out for Swiggy for sure. Let's move on and look at Arti Industries as well. Sonal, how are the numbers?
Weak numbers this time around. Again, there is pricing pressure that the company talks about. The revenues were down 7%, EBITDA down 31%, profits were down 70% on a YY basis. The company says that revenue declined to reduction in key raw material prices, and also some of the shipments were delayed from June to July. Quarter-on-quarter volume decline also came in due to some demand concerns, and pricing pressure continues to persist across major segments that they are working in as well. Their guidance stays 1,800 to 2,000 crore rupees of EBITDA by FY28. Capex for FY26 is estimated to be around 1,000 crore rupees. But going with red, because the indication was maybe pricing has bottomed, but Arti Industries says otherwise, and a big player in the industry, so there will be an impact on the stock today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's go back to Vamakshi. She's tracking PNB Housing Finance. Vama?
Well, not great news for the company, Nigel. You know, Mr. Girish Kousgi, who's the MD and CEO of the NBFC, has tendered his resignation, and he has cited that he would like to pursue opportunities outside. His resignation will be in effect from October 28th, 2025. Now, keep in mind that he was appointed as the CEO and MD of the company just 3 years ago, and he will also cease to be director on the board of directors of PHFL Home Loans. The company, however, has not yet announced who will take over. Keep in mind that since his appointment as at the helm of the company, the stock had gone up by almost over three times, from November 2022 to its recent 52-week high of almost 1,200. This overall news flow is negative because this comes after a slew of exits that have taken place at the company. So therefore, going with a red for PNB Housing.
Okay, all right, got it. Vamakshi, thank you very much for that. So PNB Housing also on our radar today. We've got Manisha now.